We have Shriram Properties that reported a decent set of third quarter numbers. The company saw sales volume grow up by almost 3% at a little over 1 million square feet. They also saw their sales value go by almost 39% as we speak. And we do have with us Gopal Krishnan, who's the Executive Director and Group Chief Financial Officer of the company. Thanks a lot for joining in. You had said that two projects of yours got deferred to the fourth quarter, and therefore third quarter on a reported basis perhaps not as strong. How much better will Q4 be than Q3, and with that, what's your target for this year?
Yeah, good morning, good afternoon, everyone. So we had a couple of projects got pushed from December proposed launches to January, February, and I think they are on track now. We already launched one of them. We are pre-marketing second project, and two more projects are lined up. In addition, we have two more launches for Q4. So in all, we have about 6 launches for Q4, and interest so far looks very exciting and interesting for us. So I think, and also Q4 is traditionally a very strong quarter for us. And therefore, we see a very strong number compared to what we have reported over the last several quarters on a quarterly run rate of 1 million square feet per quarter. I think we'll far exceed that number in Q4 as we see. For the full year, I think we'll end with, we had set ourselves a target of anywhere between 4.2 million square feet to 4.5 million square feet. And we believe we are on track to reach our expected numbers.
All right. Congratulations, sir. On track to achieve guidance is always heartening. What about FY24? How is that shaping up? If you could tell us what's the million square feet you're looking at selling for the next year? And how do you see realizations pan out from here on?
So we have a very strong pipeline of projects, as we have highlighted in the presentation put out on the stock exchanges. We have about 53-54 million square feet of pipeline. 23 million square feet are ongoing, of which 21 million square feet belong to us, and about 3 million square feet belongs to the landowner share. Out of the 21 million square feet, we have sold about 18-19 million square feet already. So we don't have an inventory, significant inventory in our ongoing project. We have about 10-15% of the projects to be sold. And therefore, we are focusing on new launches. Very robust pipeline, about 30 million square feet of pipeline that we have. And that should fuel at least a 20% CAGR in our volume for the next 2 years. And that will be backed by all of these new launches that are coming up. So we remain confident of delivering 20% growth in volumes. From a value perspective, as you would have seen, Q3 as well as 9 months, we had a very robust growth in sales value, around 35-36% for the quarter, and about 40-odd% for the 9-month period. That's primarily because we changed the product mix. Last year, this time, we sold mostly on the plot side. So we had plots accounting for almost 26-27% of our sales volume. This time, the share of plots have come down. So constructed units obviously have higher realization. And that has fueled over 30-odd% growth in sales value for the quarter and over 40+% growth in 9-month period. But from a unit realization perspective, if you look at, I think we're doing reasonably well, and I think the market's also doing well. Overall, at the product basket level, our average realization is higher by about 7% for the first 9 months. This is on top of an 8% average realization growth that we saw in second half of FY22. So together in about 12 to 18 months, we have managed to get about 15% higher realization for our, on a comparable basis.
All right. Is there any scope for further price hikes? I mean, you've taken 6% in Bengaluru, 15% in Chennai, 13% in Kolkata. Raw materials are now coming down. The cost of home ownership is increasing with rise in interest rates. That's point number one, as far as the sales is concerned. And the second point, on your own funding, is your cost of borrowing increasing? I mean, what's your proportion of borrowing from the Shriram Group right now? Last time you said that you had seen a bit of a decrease in the borrowing rate. So from both the sales end and the fundraising end, can you give us a sense?
Yeah, based on what we learned from our own understanding of the market as well as from the home loan lenders, the momentum has not come down, notwithstanding the rate hikes that I've seen. That is not yet. I think it does not, it's unlikely to have a material dent unless the rates keep moving up, maybe to a double-digit retail loan level. But as of now, I think the underlying demand seems strong, and the positive undercurrent is supporting volume growth and pricing growth for most players, and I can speak confidently for Shriram Properties. From a cost of funding, cost of debt perspective, we have actually gone down the cost curve. To clarify, we don't borrow anything from Shriram Group. You mentioned about Shriram Group. We don't borrow anything from the Shriram Group. We actually borrow from the market. We shifted from NBFC bucket to bank loans for construction finance, and that has helped us in bring down the cost of debt. Our cost of debt, speak in December, is around 12.5% for the company as a whole. And this is despite the 1.9 or 2% increase in RBI rates. And that means about 10.5% of effective rate as compared to where it was on an April 2022 basis. In April or the year-end last fiscal, we ended with about 14% cost of borrowing. So we effectively have come down meaningfully in the last 9 months, and that's very encouraging for us.
Well, I appreciate you stopping by, sir, and giving us all those details as well as numbers. Wishing you all the best for the coming quarter. As you said, Q4 is a rock-solid one, and FY24 as well, you're sounding fairly optimistic. We look forward to having a chat with you, and it appears that the real estate market is really picking up.